Good evening, everyone. Welcome to another weekly webinar. I've got Shaun Downey and Jeremy King with you tonight. We're going to run through all the global markets, update you on everything like we do usually. We're going to start off tonight with gold. I'm just going to jump straight in. We'll be on for about half an hour just to update you on the major 10 markets and anything else that's happening. Shaun will update you on sector analysis and any other useful insights that he has. Just to introduce everyone again, Shaun, welcome tonight.
Yep, hi Jeremy. Scorchio here, so just makes a change. It's good. So ready to rock.
What's your wrap up of the week?
Well, it was a busy week in the end. We had the Fed on Wednesday, but there was quite a few markets that hit some important points and stopped or reversed. So first thing was the E-mini, S&P 500 and the NASDAQ. Did a trade on tracker trades on Thursday, which showed the 720-minute support. So when we do the this sort of webinar, we concentrate on dailies and weeklies, but you can take the same principles intraday as well. So I traded on a 2-minute chart using up to half-day supports and resistances, and just showed a trade there, 5-tick stop. Take 50, 60 ticks out of it in a few hours. But it held, the S&P and the NASDAQ held the key short-term support and rallied again. We'll be updating those levels again tomorrow once we open overnight. The other thing was the Eurodollar. On the Fed, we spiked higher. It went straight to, again, those half-day, quarter-day levels and stopped, as did the pound multiple times. We did get a buy signal on the dollar index on Thursday, although support hasn't moved, so we're still watching that. The other things that on commodities, crude oil got very, very close to its final major support on the weekly, but Brent oil has held its monthly level, as has unleaded gas, and also heating oil has a weekly zone. So we're keeping an eye on that. At the moment, they've hung in there. They didn't really rally very much on Friday, though. On corn and wheat, people who've been tuned in for a while know that I've been banging on about corn for quite a while. Had a choppy week. There was a little bit of rain in the forecast, but it closed right at a monthly level to the tick. So technically, it's still looking pretty good. The one that's looking even better is wheat, which broke up on Chicago, having tested support, I think, on Tuesday. That's broken up. We're also watching Minneapolis wheat and Kansas wheat, because Kansas has got one more level to get through. But we're going to have a look at that chart and show how it's set up, and also a way that you can get involved that's very, very cheap. It's a similar trade to what you can do with the corn with a wheat ETF. So that was the main takeaways. And gold and silver were weak. Gold just about hung in there, but we're going to go through that as well.
Thanks, Shaun. Let's start off with gold. Gold's had a sell signal on it. We've been following this for at least at least a week or so. It closed the week bearish, however, has pulled up at quarterly support right here, 1247.4. The critical nearby low here is 1214.3. A weekly close under that will open up lower. Could go as far as last year's close at 1152. Given this sell signal that's in play, there's only been 6 of them since 2011. That tells me watch out to the downside, although we are expecting gold going higher in the longer term. Typically what we see is to get breakouts at any time is a slingshot move where the market suddenly spikes down and then higher. We haven't really had that yet in gold, so I'm on red alert now that gold is breaking down and going to shake out in the week longs. Having said that, to the upside, what we need to see gold do is basically break above this key monthly closing level at 1269.5. If we're above that on a daily basis, then happy to be wrong and gold's going higher, but right now it's still under pressure. If we add in our weekly pivots, then the first thing that pops up is that we closed under the weekly bearish. So immediately we're at support at the semi-annual level, and we pointed this out a few videos ago. We said, well, watch out coming into June. We've got the semi-annual bullish there, and let's just see whether it can close above or below that. Well, we're right there with 2 weeks to go, and that's not a surprise to me. So for now, The short position is still intact. We've been pointing out in daily videos this week to follow the upper daily bullish on the way down. We didn't close above it on Friday, and we did close below the daily bearish on Friday. So still no reason to be out of that short position. On a longer term basis, we've noted, however, that gold has been rotating slowly. For instance, last quarter it took out the bullish on the close, so that doesn't happen for no reason. So gold, there's a big gap in the closing study all the way down to 1152 now. So just be wary of gold if you are long. We look at the higher time frame chart. There's gaps opening down to 1219. If we were to move under this monthly, so this 1243 zone, it can gap down pretty quickly. And then again under 1205, there's a big hole down to last year's close at 1152. However, the one thing to note there is that you do have a rising quarterly trend now. So that's if I look back in history, the last time that happened was back 2014. So that's a very, very important support there at 1152. And if we do get there, I'd be obviously pretty interested in getting involved. Shaun, anything on that one?
No, I'm with you there. No reason not to be continue with that short, especially as we've had a little bit of a positive on the dollar as well. So the currency's in its favour as well.
Yeah, we'll get to that. We'll just flick over to silver. We're going to see a pretty similar story, I'd say. Just noting that as well, everyone, tomorrow's a very important date on a cyclical basis. It's gold roughly follows a 4-month cycle, about 3.5 months, and tomorrow's the day. The last time we hit this cyclical date, I'll mark it out to you, but it was actually here on that high there. That was the last cyclical date, and we dropped from whatever that was, 1285 down to 12 something or other. Similarly for silver, this high here at 1865, that was the last cycle date for silver, and it just dropped enormously on that date. Well, right now we're at a half cycle date for silver and a full cycle date for gold. So expect some sort of movement. If you believe that some of the signals that we've got in gold, then it would indicate that at some stage it's going to head further down. But I'm not going to tell the market what to do. So silver's had a bearish week. It's pulled up at last month's midpoint, 1674, right there. It's held support adjust. Had a bearish close on the week, and it's in a fragile position to say the least. We are coming into the end of the month, so we've got our bearish monthly there acting as support at 1657. If it was to take out that, that's one thing, but to take out this quarterly bearish as well, and even the yearly close, last year's close, if it was to take out that at the end of June, then we'd have a proper shakeout on our hands, which would open up basically a retest of this closing annual level at 1465. So for me, silver is coming into some form of support, but it is at final supports, and then it can gap quite quickly. So if we look at, say, some higher time frame charts, yeah, I mean the gap's immediately obvious there. So to be bullish next week, I'll just pull this off. To be bullish on Monday, you'd like to see it close back above 1680 and back above 1688 on a weekly basis to reverse the current downtrend. For bears, well, you are coming into support, so expect a bounce, but if it does break down, then that's telling you something. Sure?
Yeah, I'm with you on that. Yeah, agree. Still under pressure.
So on that note, we'll just quickly hop over to currencies, and we'll start with the dollar index. As Shaun pointed out, it's found a little bit of support. It is getting oversold at a couple of time frames but a bit like the euro, we've noted in a few of the videos that we've put out that despite the fact that it's showing signs of weakness, it hasn't been confirmed with either volume or range. So that tells us that These movements are still suspect. Longer term, sure, we think that the dollar index is going higher and the euro is going lower, but there's still been no drop in support for the dollar index. So very wary there. Yeah, I mean, in the short term, we'd like to see the dollar closing back above 98 on a monthly basis for us to sort of buy back into a reversal. A couple of things to note, however, and we pointed this out to members during the week. I'll just pull this study off. In the high in December, we had a peak cross here on a closing basis, and we've had the same event occur here. So that does sometimes mark lows, but let's just see. We haven't had qualified support drop under price yet. So really just watching.
Sorry, yeah, that crossover is unusual, and there's two things there. When you get a crossover after sideways, it means that the trend is about to start, and when the trend has already been happening and you get a crossover, it's looking for exhaustion. So we really want to see some at least daily or weekly levels that are resistance move to the bottom of the trend. Then we get interested. So waiting to pull the trigger there, really.
Yeah, so if I'll just pull off those closing studies and we'll add in some of these qualified levels. So these levels haven't dropped under price yet. So when they do, that'll be fair warning. It's interesting at the high here that we did get a peak crossover on that study too. So bottom line is we suspect that there might be a bottom forming in dollar, but we cannot say for sure at this point in time. So just need to sit on that one. Okay, let's jump to the euro quickly. Sorry guys, the internet's a bit slow. Euro sort of put in a top on a closing basis, but it's the same as the dollar index. It hasn't had a qualified resistance move above price, which means that the high is suspect and that it might actually go a bit higher. On a monthly basis, it's pretty clear. There's levels sort of early 113 that it shouldn't close over if it's putting in a high. So here comes the chart now. We'll take a look. But I mean, really, gold shouldn't be closing over that sort of 1.133 level. Euro shouldn't be closing over 1.133 in my mind. If there's a high, if there's not a high in place. So let's look here. Okay, so all right. So the critical level is obviously that high. I'm just going to add that back. Here it is there, 1.12925. Strictly speaking, on Friday we closed above the daily bullish level, so that's a signal to take some profit from this weekly sell that we've been following on the videos through the week. You should have taken some profit at least, and from here we move back above last month's close at 112.545, and you're probably going to get another pop in the euro. Some of the qualified peak levels are sitting down here. What we're really waiting for to see a major high is for these levels to step up and move above price, and as yet they haven't. We've got this warning here. This yellow closing levels moved above price. That's a warning. But we'd like to see that followed up with the qualified peak level doing the same thing. So we've had phase one of warnings for the euro, but phase two isn't there, so be careful. That's why I'd like to take some profit here, and you're definitely wrong if price moves above 1.12925. Looking at it at a weekly basis, you've got dual sell signals, dual weekly divergence-based signals, but we haven't gone near this quarterly level here at 114. So that's a bit of a warning too. I'm indifferent on the euro at the moment. It's a very weak sell at the moment, and wouldn't be surprised if it ripped up and tagged that 114 level before turning down. So be careful if you're short. And to confirm the short for me this week, I would like to see, let's have a look. To confirm a short position this week, I'd really like to see the euro back under 1.11425 as further evidence. And, really we are coming into the end of the month, so it should be trying to have a go at this lower bearish level at the figure of 1.11. Shaun?
Yeah, with you on there. We're just waiting for confirmation. We need a bit more evidence before we're interested.
Yeah. Aussie dollars, actually Aussie and the Kiwi presenting opportunities, we think. Let's just call them up. Come up to resistance, coming into the end of the month, just waiting for some sort of reversal sign. It's coinciding with the dollar index at the low, so on that basis we are interested. The Kiwi in particular looks quite interesting, but let's just have a look at the Aussie here. So the Aussie's ripped up to last quarter's close at 0.7632. The real line in the sand for the Aussie is it's 0.7837 on the spot. Let's have a look. It's 0.7818 on the futures. Only a monthly close above that is the true bullish measure for the Aussie, and until then, it's equally likely that the Aussie can turn down here. I mean, the semi-annual trend is still negative, and so is the yearly trend for that matter. So looking for sells this week on the Aussie. We look at this chart here. Yeah, there you go. We're back testing a major quarterly resistance. Clearly, if the Aussie was to break above here on a monthly basis, it opens up much higher. And with the US dollar still in what we think is a bull trend and about to turn, I'm very wary of the dollar, Aussie dollar, and many other pairs turning down right now. So be careful about being long here, because that's closing basis. The Kiwi is interesting. It's basically done the same as the Aussie. It's had a nice run up for the last few weeks, and now it's at the time where it can turn down. So it's been up for 5 weeks in a row, smashed straight into quarterly resistance. Obviously you wouldn't want to see it above this high here, 73.68, but we are looking for sells intraday, and on a closing basis, if it can close under any recent lows, that'll probably do it for me. Just wait while the daily chart loads up. Okay, so we had a stepping process end. I think the count was pretty high too. I'm just going to pull up that step process for you. There it is here. Okay, so we had a count of 9. That's pretty high. You can see the last time that happened here corresponded with this one. The market got absolutely belted. Interestingly, this white candle down here, or the white histogram, is the daily trend. Now that's disappeared as well on the current candle, so there's a bit of further evidence there that the Kiwi is prone to stepping down here. So look for, let's just call up the pivots for the week. Okay, that's going to be a good one. If you're back under, even back under this 0.7181 at the end of June, then the Kiwi's in trouble, because that's the upper bullish level, and you can see just how far it's got to go on the downside, a long way. So keep an eye out for that.
Yeah, just a thing on the Kiwi, on the shorter time frame, where I'm going up to the half-day chart or the half-day levels. The key support is 71.75, which coincides with your 71.85. Start trading below 71.75, then there's no support until 70.02. So even on a short-term basis, there's a lot of space there. The other thing that's happened is the recent high on Wednesday. All the all the intraday timeframes, so that's 120 up to half day, have all gone to the top. So that makes that higher formidable resistance as well. So fully tuned on it. We do have a customer who's very big on the fundamentals of New Zealand. I did ask him during the week what he thought. Somewhat bizarrely, the Kiwi economy is actually really based on milk and what they export to China. So he's going to keep an eye on it for me, just if anything, if he sees anything particularly interesting about what's going on fundamentally in New Zealand, then he'll flick something over. But technically, we're more interested in that. But I'm fully primed to get involved in that one.
Yeah, here's the short-term intraday chart. So it's failed at this monthly closing level, and really, the immediate levels here, the last week's close, we're back under that. Watch out for the Kiwi. Let me just put these levels in there. Yeah, here's these two key quarterly and monthly levels on the longer-term chart. That's them there. So watch out. So pound, without further ado, let's have a look at the pound firstly on the highest time frame. It's banged into a couple of like long-term, like 1992 or 1993 low. It's held that level there, and above it you've got sort of around 135 as the major zones. But look, the angles are telling you everything you need to know. I know there's a bit of dissent in the ranks at the Bank of England. A few of them wanted to raise rates, but really, I mean, the angles are telling you everything. The pound's in a downtrend, so any move up is short-lived from a long-term perspective. If we just zoom into today, we've still got a short position on the pound. It broke down. It's sort of back tested the gap and largely filled. There's a sort of a major level around that 1.2772 that's had a couple of taps at that level and has been rejected both times. Sort of a daily close back above any recent highs, probably back above at least this high here would be enough to exit and look for another opportunity to short the pound. I think our stop is a daily close above this high, or at least it should be. But look, while it remains below last month's close here at 128.95, it is most certainly bearish. We've had a couple of these, a monthly level and a weekly level move above price, and really from a closing perspective, the support's down here at 125.63, and there's a gap opening up in the mean reversion process, which is basically saying, under this, whatever that is, 12762, and a mean reversion process, and the next support's down at 1.189, which is a long way away. So for me, still have to be short pound pending any new information. Right now we're still sitting underneath the current month's midpoint, and really quarterly midpoint from last period was down here at 1.189. That's stepping up now to 1.2722. So if the pound was to duck back under this 127.22 level into the new quarter, like if at the start of June we're trading back under this 127.22 level, then it's going to open up a whole lot lower. So if I actually add in those midpoints, it might make it a bit easier to see. Hang on, folks. Let me just overlay it. Okay, so that's it there. So here's the quarterly midpoint, and what we're saying is that this line is going to step up to here. So right now we're sitting above price, but if at the start of the June we come into here, then it can move a lot lower. So just be mindful of that. John, anything else on the pound?
No, our stop is a close above that level, as you said. On the shorter term charts, the levels adjusted. I use active equalizer charts for those peak levels. So 126.77 is the line in the sand basis, the futures, and 128.43 above, which is reasonably close. So, the thing is, we try and manage risk. If it does close above that level, we'll get out and see what next opportunity comes along.
Yeah. Okay, so on that, we'll probably have a quick look at pound first, just on a short-term basis. Okay, so this is the new, this is the Q3 contract. They've just rolled over, everyone. So this is futures, it's not spot. I think spot's at like 127.70 around there. This is a bit higher on the futures, the new contract, but really, we don't want to be closing back above, well, here in the short term, but while we're under this monthly close, it's bearish for me. If we close above that, like at the end of the week, then yeah, higher. Let's go to some equities. Equities are like, the Dow's been up for 31 weeks from the the recent low. So the S&P has been up for 31 weeks. That's starting to correspond with the pi cycle, 31.4. So it is a timing point. Let's have a look at the S&P. Either it's, that period of extension is also critical when you look at our pivot studies, because we haven't been able to take out the monthly bullish for 4 months. Well, I think it's 4 on S&P. It might be less. I know it's been more explosive than the Dow. Let's just have a quick look. But it's been months since the S&P and the Dow have been able to take out monthly bullish on a closing basis. So that alongside this sort of 31 weeks without having a proper correction has me on red alert for equities. I mean, we've maintained the whole time. Be careful. Don't sell the S&P until it gives you the signal. Don't sell equities. But right now, let's have a look at pivots. Okay, so this is what I'm talking about here. It's like there's one, there's the upper monthly bullish, 2, 3, that's 4. So it's got to get on with it like right now. And coming into June as well, we've got the quarterly bearish, bullish coming into play. If it can't close above that, then that's probably all you need to know. It's likely to backtest support. Conversely, if it was to break out this week and close above there, then obviously it's going much, much higher.
I think the thing there is there's a lot of confluence. So on the intraday basis, I had 24.16.
Yeah, that's
and the low was one tick below it. And of course we've rolled over as well. We have witching hour on Friday. So 24.16 and a quarter is a really big level on the shorter term, which is also very close to your monthly level as well at 14. So there's a real magnet there. Yeah.
And the weekly bearish.
Exactly. So if you start closing below there, then that opens up the downside. It's probably worth looking at the Nasdaq quickly as well, just to see if it's very similar. Just while Jeremy's bringing that up, we do a lot of analysis on FANG because it's got such a big influence on the Nasdaq and to a certain extent the S&P as well. Interesting things was that 142.40 to 80 on Apple was a key support, and we closed just below it, only a fraction, mind. Netflix held a support in the high 140s. Google held above a support as well, which I think is 938. Amazon's in a bit of no man's land. So for Nasdaq to want to see a breakdown in the index, need to see those really big stocks breaking as well. Facebook is in a bit of no man's land. So keeping a very firm eye on that. One of the reasons for the buys on Nasdaq on Thursday was because Apple was right at its support, and so was Netflix. And the first time they get to those major levels, you would expect them to bounce, which is what they did. However, by Friday, Apple had sort of broken back down again. So back to the Nasdaq. Yeah.
Yeah, so the Nasdaq, there's the line in the sand right there. If we close under there at the end of the month, then the Nasdaq's got a big problem. So that level there is 5550 basically. If you were to close June under that, then you're gonna reject the quarterly bullish, and you're gonna close under the monthly bearish, and you're gonna close under what is a pretty critical low. So it is in a overbought state. So critical week ahead of basically critical month for all equities by the look of it. Let's see if we can glean anything from bonds. Bonds have had space above. We've pointed it out in the mean reversion process. Because it put in such a major high last year and broke so heavily, it left a very solid 50% retracement behind it, and that's exactly what it's filling now, at least in the 30 years, probably 10 years. It has come into a critical resistance level on the quarterly and semi-annual basis, and even from some longer-term trend charts that I've been sort of doing this afternoon, it has found a pretty critical level. Where is that? So
Yeah, I've been talking about bonds a lot this week, and we had some buy signals on the 10-year note and the 5-year note, but we needed the Treasury bonds to confirm it. There was a weekly level at 156.10, which is powerful, and we stopped about 5 ticks ahead of it on Wednesday. So for me, for the whole bond market process to be bullish, T-bonds have got to close above 156.10. And that would maybe allow another leg higher. But we are coming into some pretty critical resistances, aren't we? So,
yeah. So if you look at the mean reversion process, really that's how far away like the previous annual midpoint is, 162. That's miles away. Will it get there? I'm not sure. If we go right to today and we just look at our semi-annual and quarterly bullish, then they're right at it now. So this is a pretty critical zone for bonds. Must get above this sort of monthly level end of June for it to continue higher and really put a proper squeeze on. For now, if we look at qualified peaks, yeah, nothing's moved above price at the moment, so it's still free really to move higher if it wants to, but it does have a fair bit of work in front of it. So some short-term indications that it might be at a bit of a top place, but certainly there's been no qualification. So no permission to be short just yet. Wait for a bearish close, at the least, a close under a daily bearish on a sell signal, and be mindful that the broader trend for bonds is down, and somewhere in here we are going to be presented with an excellent selling opportunity that we're going to absolutely nail when it comes. And from here, expecting bonds to go, basically a lot lower, and new lows, hopefully. So stay tuned there on bonds. We'll update, but the sentiment there is looking to get short, but the relevant information isn't in place to make that decision yet. Shaun, any other markets? Oh yeah, we'll go to oil.
yeah, do oil, and then I'll do the corn, wheat, and the stocks that we're interested in, and then that'll be it.
Okay.
Oh, you got a green dot there.
Yeah, that's right. There's a buy signal on Friday, and it closed above the daily bullish as well. So we've mentioned this 42 level for some time now. If we close under there in June, then that's it. That's the end of the uptrend for the short term. But we've held. This is a very important low here that qualified support there at 43.76. Be mindful of the bounce here. It's probably not a bad one to action here in the short term. We'll have a look at that on Monday. On a closing basis, we're all the way back up here is the 48.67 or 48.63, sorry. So this is an excellent place where oil can put on a beautiful short squeeze. It has held the recent low, so be careful if you are short. Shaun?
Yeah, as I said, Brent held monthly, unleaded gas held monthly. So for me, we're at a really critical point. We've had a buy. We are a little bit overextended. To me, there's no reason to be short. That's for sure. If I was short, I'd be taking my money. On the, if we do close below those levels, then it's in trouble. It feels like it's at an important point. Do you want to do those trend line charts? Sorry.
Yeah, I'll do that. I'll flick over to corn and then we'll just have a quick look at some of the trend lines on the grains.
Yeah, they're pretty critical at the moment.
I've got about 10 minutes, Shaun.
Okay, we'll do those lines and then I'll quickly do my bit. It's not going to take long.
Okay, so I might just start with the big picture for everyone's benefit. So corn, yeah, let's go to corn. Corn is very interesting because the last quarter we've kind of broken above this downtrend line that's been in place since July 13, and we've also now closed above this uptrend channel. And the obvious thing, I know Shaun's been had a lot to say about corn and about it breaking out, and this quarterly chart is showing you exactly that. Corn can fly up to 55.10 if it wants to. So over to you, Shaun.
Okay, shall I share my screen? Let's just.
Yep. So I'll stop sharing.
Okay.
You there?
Yeah, I'm just. Right, just spread this out. Right.
Hey, Shaun, have you got can you, on your screen, can you stop, have you got the capability to stop this webinar?
Sorry, have I got there?
Can you end this event?
I'm not sure.
Is there a red button above?
No.
No, okay, that's fine.
Okay, no, you're the room owner, so I'll do this quickly. Don't worry, it's not going to take long.
I can't see your screen just yet.
Can you see it now?
No.
Damn. Let's try again. See it now?
Yep.
Okay. As wheat is the one that's up, I'll just quickly do wheat. The thing that I'm really interested in here is the monthly level, this blue line, which has been there for a long, long time. We held it on a closing basis on Monday, and now we've broken out and taken out this daily level, so there's some room there. Also on the time area, it's called splits on my CQG. It's this pink line here, which is the quarterly, and it's going to move lower next month. And the semi-annual is also going to move lower. And so that's going to create space up to at least 511. We really don't have any major levels till a monthly up at around 596, 600. So plenty of room on wheat. The thing that I want to show you, let me just bring over my Yahoo screen, is there is a way of getting involved in this, and it's via an ETF called Wheat, W-E-A-T. January 19 calls. If you were to buy like an 8 call, is trading at 55 cents. It's going to cost you $55 per 100 shares, and your risk is defined, and you're running all the way through 2 crop cycles effectively. If I was just to show you what wheat can do, it hasn't been going for a huge amount of time, but when wheat was trading at $8, this fund was trading, I think, at around 23. So if you look at this base, even when wheat went to 6, which is around here, this ETF was trading around 16. So it's very similar to corn in that your risk is defined. You can ride through the volatility. Your level of entry is ridiculously cheap. And I think it's a pretty compelling trade. I don't see any reason why there isn't to get involved. If I do corn, actually I'll do Kansas City wheat, because 3 different types of wheat: spring wheat, hard wheat, winter wheat, I think. This is the Kansas City contract, and we just failed to take out 474.5. So we did trade above it, we didn't get above it, but the time area is breaking up. They're all going to flip lower and open up space. And again, there's no major levels for a long, long way. So the nearest weekly level is at 597. If I do Minneapolis, that's already gone. Minneapolis, weather's been pretty horrible up there. We actually broke out a couple of weeks ago, came back and held the monthly breakout point. There's nothing above for another 100. Moving on to corn, week, a little bit of rain in the forecast. And we closed at the monthly level to the tick, 384.5. So pretty important this week. The weather forecasts are mixed depending on what model you follow. But technically, if we can close above 384.5 and then take out 405, then it starts opening up the upside on that one. Moving on to stocks, some additions that we had: Kanoko, COP. As part of rotation, people selling tech and buying oil stocks. We had a power play buy at monthly support. It was also a time continuation. We came back and filled the gap intraday by a few ticks and then closed very strong on Friday. If you think about what oil was doing, which has been pretty poor, this stock is doing very, very well. We got 48.45, closed below that monthly. The trade is wrong. The other one is FTR. This is one of our extremes. Very unloved stock. Terrible stats. The thing that interested us was the weekly went to the bottom. That's always a proviso, whether we're looking for tops or bottoms in stocks. We held that level. We got a buy signal, which is when we've got involved. And we picked up some 150 calls for next to nothing. And it broke out on Friday. It was pretty strong on Friday. There's a very heavy short interest here. So initial rally would just be short covering. Key thing is taking out 154. If we do that on a daily, then it opens up a lot of upside. So that's one that we're watching pretty closely. One's on our watch list in terms of sectors. The number one sector is semiconductors. So we have SOX. Had our second reversal last week. Got to take out this daily level though. And if I do SMH, which is the same thing, similar pattern, you can see where that daily level is. So we're watching that. The other one is home builders, XHB, and this is very close to being actionable. Let's get rid of that. The price has come all the way up towards a monthly resistance. We've had a bear cage signal. The thing that really interests me is when you look at the components of the ETF. We have DHI, which I think is the number one holding, right at this monthly. Also had a bear cage signal. Got some daily supports below. And then if we do LEN, which is another one, it's almost identical. So this is very much on our watch list. So it's the number 4 sector, so it's pretty high. And definitely looking to get involved in that one. Trying to think if there's any other stocks. I think that's probably it for now, the ones that are really interesting. So I think that's a wrap, yeah?
Yeah, so it's going to be an interesting week ahead. And make sure you ask questions on the Slack site if there is anything you want to know. And look forward to another trading week. So yeah, that's a wrap.
Okay, let me stop sharing and then you can shut it down.
That's all right. I can do that now.
Oh, you can do it, yeah.
Thanks, Shaun,
Okay.
and see you next week.
Okay. Thanks, everybody. Bye-bye.
Bye.